Okay, let's go through what's happening in the world of commodities. Manisha is joining in with the one commodity that she's tracking today. Manisha, over to you.
And it has to be crude oil prices. With the kind of surge that we've seen onto crude oil prices, 3.5% overnight in case of WTI and almost 3% of gains coming in for Brent prices as well. So we are trading at the highest level in last 10 months, and this is the highest closing as well that we have seen come in for 2023. This is going to be the best quarter with 30% of gains since the early 2022, and prices are looking at very strong gains as we've seen into the markets. There have been various supply concerns which have been keeping the prices on the higher side here. Well, to begin with, the US crude inventories have declined for a third straight week, and markets were anticipating a 40,000 barrels of a decline, but we saw 2.2 million barrels of a decline coming in to 416 is the total stock now, which is the lowest in last couple of years. And not just the US stocks, but if you look at the Cushing stocks, those are the highest in 3 years as well. Markets have been projecting a deficit in the fourth quarter, and it's not just the banks and brokerages, but the major agencies like OPEC, IEA and EIA also have been putting out figures on how the supply tightness will lead to deficit in the fourth quarter is the reason you have seen that sentiment also already supporting prices as we see them now. Saudi Arabia outcuts, Russia export curbs also have impacted the markets, and this is one of the major reasons that we have seen prices gain up so strongly in this quarter itself. The US Oklahoma storage, as I said, also has been constantly declining. It is below the minimum reserve that they need to keep, and that has been supportive. So it's not just about the OPEC and allies, but the non-OPEC countries as well are looking at lower production and lower inventories. Add to that the fact that as the fundamentals are stronger, the hedge funds have had the most bullish bets on crude prices since 2022. It's at Feb 2022 highs, and in last 4 weeks we have seen the net positions continue to gain on a very strong pace, 15% on a week-on-week basis, and is the reason you have seen these gains come in for the prices. I just want to take you to on what crude prices have done in this year. We started this year for crude at $82 a barrel. We saw the prices decline all the way to $70 in the month of June. And from there, the prices have surged to $97 at this point in time. So it has been a $27 of a jump up that we have seen come in for this quarter itself. The major gains have come in last 3 weeks itself. So on August 23rd, we were trading at $82, and today we are trading at $97. So this $15 of a jump up has actually come in the matter of 3 weeks itself. The markets are looking at stronger deficits, and that is what the number seems to be showing us. Take a look at what the projections are now going forward when it comes to the rest of 2023. And much of this is about fourth quarter, really, where we are talking about deficits. So whether it's about Saxo Bank, Probus Securities, they're talking about $95 to $100 a barrel. It actually is anywhere between 90 to 105 is what Goldman Sachs, Fat Profits, Bank of America also seem to be talking about. In the last couple of weeks, we have seen other banks and brokerages also revise their targets on the higher side. Wood Mackenzie's talked about 88 of an average, but take a look at this. 100 plus kind of level is what JP Morgan, ANZ, Exim Australia, Stanchart came out with a report last evening. They are also talking about 100 as a substantial or an intraday spike that you could be looking at in the crude oil prices in the coming quarter. So bullish momentum continues when it comes to this one.
All right, Manisha, thanks very much for that. Well, oil is the big one, and we'll continue to track it with Manisha through the course of the day.